Good morning, everyone. Welcome to the Commodities and Currencies podcast. This is Manish Sharma joining in as fundamental research analyst, and we will be taking ahead to the last week events as well as the key triggers for this week. So let's start. Talking about the precious metals first, gold have almost slumped to around $4,000 per ounce level in the early trade today, where the precious metal extended its decline from last week on constructive US-China trade outcome, which have supported the US overall the global risk appetite. US President and Chinese counterpart have agreed to avoid escalation in their trade war last week, where Trump decided to lower his tariff from 57% to 47% in exchange for China suspending its export controls on its rare earth and increasing purchases of American soybeans. Positive developments surrounding the US China trade deal now could reduce the demand for safe haven assets like gold and also could continue to weigh on the sentiments. Overall, on the last week also, we saw that US Fed lowered its benchmark interest rates by 25 basis point, where the Fed chair Jerome Powell said during the press conference that the further reduction in the policy rate at the December meeting is not a foregone conclusion. The markets are now discounting almost 63% chance that the Fed will lower its interest rate in the upcoming December meeting, while the markets are also discounting 82 basis point rate reduction by the end of 2026 to 3.06% from the current effective rate of 3.75 to 4%. Also, on the domestic front, we saw that India lowered its base import price last week, where the drop in the price, as said by the government on a fortnightly basis, now could lower the landed cost, favoring which could favor the imports, but it could also exert the pressure on the spot price locally. Moving ahead, what technically the levels which we could see in gold is something the supports could be around 1,18,500 to 1,19,000, while the resistance on the higher side could be 1,24,800 and 1,26,900 on the MCX December futures contract. The focus for this week for gold and silver would be on the US macro cues, where the US ISM PMI is scheduled to be released today. While if the reports show weaker than expected outcome, then this could drag the US dollar lower and provide some support to the gold prices. However, cautious trend persists on the upside amid upside global cues such as improving China-US trade relations and a strengthening US dollar could again limit some sharp gains this week. Technically, a move towards for $4070 to 4080 could continue to face resistance in spot in the near term unless inflation concerns ease further or the global growth data weakens. For silver, talking about the silver, the resistance on the higher side could remain at around 1,51,400 to 1,53,800 in the December futures contract, while supports on the lower side could remain at around 1,45,900 to 1,43,600 for the current week. Now let's talk about the base metals. Copper have retreated slightly to $10,887 per ton levels on the LME after it hit a record $11,200 tons earlier in the last week because of the manufacturing data from the China which was remained weak and had tempered the optimism. The country's PMI slipped in October, where it marks the longest contraction streak in nearly a decade, on worrying sign that the world's top copper consumer could be heading for the slowdown in the economy. Despite this, the lingering supply disruptions and talk of potential output curbs in the China have kept losses limited. The rally momentum built on the tight supply and speculative interest now faces its first real test amid softening demand signals. High prices are suppressing near-term demand, and a firm US dollar may cap the further upside, while copper is likely to trade range-bound at the elevated levels, with volatility persisting ahead of the next week options expiry. Momentum rather than fundamentals could now drive the rally, as any pause could trigger profit-taking moves also. We consumer restocking fading, and the market faces a tug of war between bullish sentiment and softer macroeconomic signals in the weeks ahead. For MCX, the supports for copper could remain at around 985 levels and 960 levels on a weekly basis, while for the resistance on the higher side could be around 1025 to 1045 on MCX November futures contract. The trend could remain again a sideways to slightly on the upside. For crude oil, we have seen that crude oil have ended the last week slightly on the lower side, with WTI almost down 0.85% to $60.98. Despite the brief rallies on speculative headlines about a US strike on Venezuela and potential trade threat from the new sanctions, sentiments have stayed cautious ahead of the OPEC meeting as focus have returned to supply fundamentals. Sunday's OPEC meeting outcome showed that OPEC Plus wants to raise the output modestly in December by 1.37 lakh barrels per day, maintaining a cautious approach. Production hikes to pause in the Q1 of the next year, where concerns of oversupply and weak demand persist. The move aims to stabilize prices after crude touched a 5-month high in October. Total 2025 output hikes stand at 2.9 million barrels per day. For the outlook for this week, the oil prices are likely to stay supported after OPEC Plus have paused its output hikes, while supply glut concerns and ongoing geopolitical risks from Ukraine strikes on Russian infrastructure concerns persist. WTI may find resistance at around 61.80 and supports at around 60.50 levels, while the bias remains mildly on the upside as the supply side risk offset demand worries. For the MCX contract, the crude oil futures could find support at around 5250 levels, and the next support comes in at around 5080 levels. On the higher side, the 5560 levels could be the first resistance, followed by 5700 levels on a weekly basis. The trend remains sideways to slightly on the upside. Indian rupee has faced a risk of breaching its record low as it hovers near its record low this week and could also surpass above 89 levels because of the concerns that the overall the central bank intervention remains limited, while the merchant outflows are skewed towards the dollar demand and in the absence of central bank's dollar sales. Now, the focus will also be on the extent of portfolio inflows that there are two large public offerings scheduled this week, where the Lenskart IPO will be end on Tuesday, while the stock brokers grow $754 million IPO will open on the same day. Overall, the rupee is expected to remain under pressure for this week. So this is all about the commodities and currency outlook. I hope you have gone through the same, and we wish you a very successful trading day ahead. Thank you very much.